Hello everyone, today is Friday, November 5th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If it's your first time tuning in, welcome. Thanks for being here. Here's how these videos work. We break up our analysis into two parts. In part one, we look at everything that went on this week in markets. We look at things like internals, sector performance, credit markets, volatility, all the good stuff, pick apart everything that stands out, looks different or interesting. And then in part two, we jump into those charts. We look at those longer term trends and try and make sense of the action as a whole. So hopefully that sounds good to you. Let's jump into some of the headlines, takeaways from this week of trading. First, most importantly, we had the Fed signaling that they were going to begin winding down their bond purchases. This is the notorious tapering, and we've gotten some clarity as to their plan. It is a small wind down at this point, and of course, we see how markets responded this week, and they sort of shrugged it off. Not a whole lot really changed. We saw interest rates fall. We saw equity markets continue to rise. We saw a little more on the inflationary type of names working. We'll talk more about that later in this video. But that was our top headline there. We saw small caps breaking out of their 9-month range. They've been going nowhere forever. And we finally got that resolved this week. Strong candle breakout volume this week. We'll talk about that. And as mentioned at the top, interest rates on the decline. So let's take a look at the numbers here. 1 week change numbers. This is the last column. You can see everything was in the green yet again. This market continues to chug higher, about 1.5% in the Dow Jones, almost 2% in the S&P, Nasdaq up 3%. Here's our big winner now, 6% in the Russell 2000. Take a look at the 1 month change numbers. So you can see finally now the Russell 2000 is coming back to life. This has been the laggard here a bit over the past month, and it's quickly jumping up to kind of that leadership sort of spot. We also saw world stocks doing well this week, up 1.19%. Now, if we take a look at under the hood, we take a look at market internals. What is the average stock doing? What is the average stock sort of telling us out there? And you can see that we've got some good, strong numbers this week. Top row is the number of NYSE 52-week highs minus lows. And you can see we've got triple digits every single day posted. And we've got 1,015 net 52-week highs made this week. That's a very nice, impressive, strong, bullish number, right? You can label it however you prefer, but that tells me that the majority of stocks are breaking out to new 52-week highs. That is a good undercurrent for this market. Again, that's my intermediate term measure of strength, of commitment. So it doesn't speak to the short term, it speaks to maybe the intermediate term of where the money flow is actually moving. If we take a look at the AD line here, so you can see again on the week, pretty solid numbers here, bunch of three specifically 1,000 plus advancing stocks on the session, so 3,100 for the week. That's pretty constructive, and you can see things are getting a little bit hot on the upside here. 72% of stocks are over their 20 SMA in the S&P 500. Here's a closer look at the 52-week highs minus lows. So we're just looking over the past 30 trading sessions and we're summing this up, and you can see it's just an absolute runaway train to the upside. And this is quite frankly exactly what you want to see if you are bullish on this market. And none of this should really be a surprise here this week. This is something that we've been tracking and talking about and hinting to the fact that this is bullish. This is constructive. The fact that the numbers have been turning up over the past couple of weeks, we've sort of been putting out the optimism there on the small caps, leading, breaking out, some of our indicators turning up. We talked about the seasonal markup and chase period that we are entering here in the month of November into year end. So all of these things have been kind of in motion. The evidence has been there over the past few weeks, and hopefully this isn't, a total surprise from anyone in the behavior that we kind of saw this week in the markets. If we take a look at sector performance, you can see, again, very constructive here across the board. Consumer discretionary at the top of the list, up 5%. It's a big week for XLY. We had tech in second spot, and we had materials in the third spot. Pretty powerful trifecta there in the top. And on the downside, we see healthcare, we see financials, we see utilities. We had two of those sectors in the red by about 0.5%. Utilities up about 0.5% on the week. If we take a look at correlations here, there's a couple of standouts. So notably, we'll look at this interest rate correlation here. So this is the 10-year yield. And you can see essentially we've got this nice negative inverse correlation that is creeping up here in the relationship between equity markets. So Nasdaq, Russell, and S&P, Dow Jones. You can see how they are moving effectively in the inverse opposite direction as interest rates, as the 10-year yield. And so that relationship certainly playing itself out. And, we saw the fall in interest rates this week. We saw equity markets rise this week. So that is the relationship that is building there. You can also see, just kind of interesting, a inverse correlation here to USO that has been building up. So again, kind of stocks and the commodity oil, or the USO ETF that tracks the commodity oil, has also been moving in an opposite sort of direction. So those, I think, are pretty standout correlations there that stick out to me. Obviously, as I always like to say, take a look at this chart yourself, hit pause, see if there's anything else that jumps out to you. Leave a comment below if you see anything else interesting here from this data. As a reminder, it's the past 10 days of market data. That's how we build this matrix. So if we take a look at volatility here, next up, you can see basically no change. And that's good and bad, right? Because we did see equity markets continue to climb higher here, but we didn't necessarily see the VIX continue to fall lower. So there is some bid here, right? Or there is at least some reluctance to see volatility, to see complacency fall anymore in this market. That could lead to, maybe some short-term evidence here that we're due for a little bit of a rug pull, that we're due for a little bit of volatility, maybe a little sprout up here. But again, the trend, the overall dominating evidence is still in the favor of the bulls, but maybe this is suggesting that, the market has climbed pretty far, pretty quickly, and we could take a bit of a breather here. So VIX term structure, no change, still 16.26 here, 16.38 going into the weekend. If we take a look at interest rates and credit, you can see again those yields falling across the boards. What this basically means is you've got bond markets, so your TLTs and your IEFs and your pick your bond fund was basically higher this week as we saw those yields across the curve fall, mostly in the short end too. So you can see the 5-year was down 11%. That's a pretty good drop there in the short end of the yield curve, and the bond market. So reacting pretty favorably here again. Investment grade bonds, high yield bonds up almost 1%. Pretty strong moves in that space. If we take a look at dollar and commodities, you can see pretty muted here. There's no big standouts. Basically, everything was up or down about 1%. Dollar index was slightly higher. Gold, we're going to talk about gold a little bit later. That is actually starting to shape up a bit here. So we are going to talk about that. That chart is starting to, finally heal itself. Silver, maybe to a lesser extent, is kind of the same thing. Bitcoin, not really doing a whole lot here. It's still just kind of chugging sideways around the 60K. Tried to break out, then it kind of failed. Then it, failed to break down. So we're kind of meandering here in the old Bitcoin. We'll see how that ends up resolving itself. Ag, down slightly. Crude oil, down slightly. Natural gas, up 1.63%. So put it all together, report card, another A here. And this has been racking up these strong report cards basically over the past few weeks here. So another good grade for the market. Things are working, things are bullish out there, and it's paying to be long stocks at this time. Now, if we take a look at our two trading strategies here, so Merlin in the top is our longer term, intermediate term trading system. Call it a swing system, maybe a little bit longer than maybe most people think about swing trading, holding stocks for about 6 weeks or so, but it continues to be involved in this market, really enjoying this latest run. I believe the strategy is at new year-to-date highs as of the time of recording this, although I'm not 100% sure, but it should be pretty darn close, if not there. So it's having a good year. It's enjoying this market. It's riding the uptrend in stocks, and there's basically been no change. Now, our shorter term strategy is more resistant, right? It is more sensitive to the speed at which things go up and down in the short term. So Lamerick here on the short term swing trading system is net short this market heading into the weekend. It's seeing that the market has climbed a lot of ground in a short amount of time, and it's going very tactically here to put on some, well, I guess if you were trading these together, I guess you could think of it as maybe hedging the Merlin system, right? That is kind of the balance between these. It's the beauty of trading both of them. It's why I like allocating to both of these strategies, but it is trading independently, of course, and it is seeing just some short-term excitement that it is trying to get on the other side of. So you can see 33% to the short side, not very aggressive. It's just expressing a little short-term concern there. So that is the way we are positioned. These are trading systems that we offer signals and reports for every single night. So if you do want to follow along with these trading systems, we post performance every single month and show how the systems are performing. So check that out on our website or at the link appearing in the top right of your screen. And in just a moment here, we'll be back with part 2. All right, we are back here. We've got TC 2000 open. We've got the S&P 500 in the top left, Nasdaq top right, Russell bottom left, and ACWX International Stocks, ACWX in the bottom right. This is a weekly time frame, and the price series itself is the white dashed lines that you see, and the multicolored dots are a custom smart trend filter that we've developed for TC 2000 and TradingView. And if you'd like to get that indicator, you can on our website. Apply it to your charts. Helps us measure trend strength, and it's based on price, volume, and time. So if we take a look here at the layout, the signaling of this trend filter on the weekly time frames, you can basically see more of the same. And that's not too much of a surprise because we turned up last week in all of these markets. We essentially got these green, fresh green dots printed in all of these markets, and price only went higher this week. So naturally, we still see more bullish sort of continuation and outlook here. I do want to notably sort of point to the Russell 2000, which was a fresh weekly buy signal in this market for the first time since June of this year. We had a brief period where it flashed green in June that ultimately didn't really go anywhere, and then we just went back to treading water. And prior to that, you'd have to go back to May and April. But we've essentially been treading water here. We got that transition up last week, which was an early signal, was an early transition, because this week, of course, is where we saw the Russell put in a 6% breakout week to the upside. So hopefully, you know, just this simple heuristic here and the fact that we had been talking about it, I talked about my own positioning, that I was starting to accumulate a position here in the Russell a couple of weeks back, got you maybe a little bit of maybe alpha there last week by watching this video and picking up a good trade idea. Now, let's go down to the daily chart, and then we're going to look into these indices a little bit closer. Daily chart here, again, everything's bullish, no change. So I'm not going to go into any great detail here, but basically on the daily time frame, all of these markets have been bullish for the past 2.5 weeks or so. And again, that kind of speaks to why earlier in the video, when we think about prices making new highs here, stocks setting new all-time highs, it really shouldn't be too much of a surprise. It's more of the same. It's more of the same trends, evidence, and continuation that has been in place here for the better part of the last month. So that's kind of how everything is shaking out there from our simple trend indicator model. Let's go to some candlestick analysis. Let's look at things a little bit closer here. And this is kind of our view of the S&P 500, and it's totally vertical. I mean, it is an absolute, just, you have to chase this market if you want to participate at this time. There were a number of spots back here to, you know, tactically sort of get in at lower risk entry points, or to certainly, you know, take notice as we started to break through prior levels. But ever since we took out, you know, 45, 50, let's call it, in the S&P 500, this market has not looked back. It has just been consecutive sort of green bars day after day. And, you know, if we throw on Bollinger Bands here, always goes to that chart. If we throw on Bollinger Bands here, you can see it's essentially just riding the upper band all the way to the upside. So it is staying kind of extended. It is staying in a nice kind of markup phase, but it is great if you're involved. It is tough if you are not involved to get in here at this point, because we just haven't had any pullbacks or, you know, sideways ranges develop in the market for more than, you know, a few hours during the trading session. So when I look at this market, again, I will just essentially echo the same comments I've said. Multiple time frames, trading at all-time highs, multiple time frames, bullish trends are in place. We are extended by lots of, you know, traditional metrics. We've covered a lot of ground. I showed you just a minute ago, our short-term trading system is starting to fight against this a little bit and looking to kind of play for a little reversion lower. We'll see if it's right or not. It's not trying to short the S&P 500. It's picking weaker stocks, so it's kind of a, you know, separate discussion. But the point is, you know, a little bit of a check back here could make sense, might make sense, right? Might fit the mold. But if there are enough people fighting and if there are enough people not involved, then this market's going to just continue to melt up here into the holidays, into the year end, and, you know, cause a lot of FOMO in these next handful of weeks. So S&P 500, what I'd be paying attention to, I mean, the biggest relevant level is still 45.50. We don't really have any other prior pivots or anything else to really latch onto here. You could obviously draw some short-term trend lines, measure price against, you know, some of the slopes that we've been rising at. So pay attention to that if that's your cup of tea. But, you know, 45.40 or so, 45.50, that's the big relevant level. And then, you know, we've had a little bit of chop in here. This is kind of a minor zone. I would kind of put in right around here, 4,600. If we pulled back to 4,600, it's about 2%. You know, that could happen. That could be a good buying opportunity if you're not involved in this market. So that's the way the S&P 500 is shaking out. The big story here is the Russell 2000. So let's zoom out on this one. Take a look at this range here, and you can see we have had lots of attempts to break out, but this one finally stuck. So we finally got this highest volume that we've seen in the Russell since March, and it was to the upside, and it's at new all-time highs. And this is a market, this is an index, a small cap basket that has gone nowhere for the past 9 months. So as I sort of posted on Twitter earlier in this week, and we've been talking about countlessly on these videos, there's lots of fuel in this tank. There's a big range that's developed here, and this could be, you know, just a nice trade to latch on to. We were early on this, so I talked about my personal sort of positioning here, where I established a position in the Russell. I think it was on this day here. I think I added to it on this day, and then I added to it one more time somewhere in here. So there were 3 spots where I sort of talked about the entry, the position that I was taking on this. It was a little bit early. I was, you know, a couple of weeks disappointed because the Russell was lagging versus the S&P and the Nasdaq. But now we had a great week of catch up here as this really launched to new highs. And then again, the prior week, we also had our smart trend filter turn up on this index as well. So hopefully some of you were able to participate in that. You've got a fresh breakout here. It's a tough chase right now, but time frame matters because, again, when you look at something like this, you do see the fuel that is in the potential tank here for the Russell 2000. Going forward, I would essentially just want to see this holding over, you know, 233, 234, lower 230s. That's the general area now. I would love to see the Russell 2000 hold. If we have to come back and test it one time, I'd be looking at that as an opportunity to maybe position in on a retest, but we'll see if we even get that chance heading into the, you know, middle of November. If we take a look at the Nasdaq 100, I mean, this is very similar now to the S&P 500. I mean, just take a look at all of the green bars of volume, all the updates that have been in place here in the Nasdaq 100 ever since, you know, breaking out and just sort of releasing to the upside here early to mid-October. This hasn't looked back. Again, the biggest relevant level, 383 here in the Qs, which is, only about, let's see, well, I guess a little further than I thought, 4.5%. Didn't think we were quite that far away from it now, but there you are, 4.5%. That'd be the biggest relevant level I'd be paying attention to. Of course, you could draw those trend lines, the slope, and all of that to get some tighter, trend line levels to pay attention to. So that's it. That's kind of how I am very simply looking at the market. Overextended, yes, in the short term. We've said that the past 2 weeks, though, and this market continues to show lots of underlying strength, participation, and essentially commitment by the bulls on longer term time frames. So let's look at some other markets now. Let's look at TLT. We haven't looked at TLT in a couple weeks, I don't think, but TLT here finally starting to get its act together and shape back up. Remember, it had this, well, first off, it had a nice run off of the lows here in the first half of this year. And then it sort of just, went sideways, developed in a range, put in this lower high breakout failure attempt, rolled over, chopped around, and now here we go again back to the upside. So it's been a little bit messy here. This is the weekly view. Maybe let's clean it up here. This is the weekly view, and what we're essentially looking for now is to see if this is going to be our higher low that gets put in here for TLT. We'll need to see now TLT break over 152 or so, and if it does, then we might have that nice longer term, intermediate term trend with a bull market back in the bond market with interest rates falling back down in place. We're obviously not there yet, but that's the development that is potentially at work right now. So we'll see if that happens. Good week for bond holders this week. If we take a look at the dollar, you can see the dollar is just right back up towards highs. It is kind of fumbling a bit today. A lot of volume coming in on the UUP index, but it's back up here near highs. Got some maybe negative MACD divergence. So we're kind of seeing and feeling how this dollar is gonna fare back up here if it can take out, challenge these prior highs made in October. Again, US dollar really going wild to the upside is generally not good for equities, not good for commodities. It does put pressure on lots of interesting spots in the market. So it's not a great sign if we're going to see the dollar really start ripping to the upside here. And of course, all of this is related to interest rates and Fed and all that fun stuff. So we'll see how that shakes out. But right now it's making its attempt back up there towards highs. And then we talked about the VIX earlier in this video. You can see it's trying to hang on here. It didn't like staying around 15, so it is finding some support. It's finding a little bit of bounce here. And again, that might be if you're a short-term contrarian in the market, right? And you're looking at how extended this is. You're looking at the way this closed with this doji here, and then you're looking at what the VIX is printing or did for this week. Then a shot on the short side of this market, something like our Lamerick system, can make sense, right? You get the little bit of a short-term setup here, but again, it's a dangerous game. More experienced traders, that's what I would be, suggesting play that side of the market right now. If we look at gold, so you can see gold is shaping up here. So it had a great week this week, or a pretty good week. High volume on Friday. Weekly close, let's take a look at it, getting us to the highest weekly close since September, almost August. So starting to shape back up here. That is something to pay attention to, and maybe finally seeing some positive developments there. So keep an eye on that. Silver, kind of the same thing. I like gold. The real positioning there on gold maybe slightly better, but you can see consecutive weekly green bars here in silver shaping back up. Let's take a look at our sector and industries and then call it a wrap for this week. We had lots of things, as you might imagine, working on the bullish side here, so I'm just going to expand this. I'm not going to go through and comment on everything. Lots of sectors and industries in the cyclical side of things. We put out a trade ideas video earlier this week, and it was loaded with cyclical names. So these are things like, restaurants, which are considered to be cyclicals, auto parts, apparel, lots of retail was working this week, department stores, footwear and accessories, lodging, luxury goods, recreational vehicles, all these things shaping up. I mean, look at this here in recreational vehicles, breaking out here of a nice little range. And if we scroll down some more, you can see we've got even some things in the defensive sector starting to lift back up to the upside. So packaged foods, gone sideways for a long time, that's starting to lift up. Personal products, household and personal products, beverages, food distribution, a little more of the boring stuff, but it did start to move this week as well. And then you finish off here with industrials. You know, also a lot of these names moving to new all-time highs, XLI type of thing, breaking out to new highs. And then a little bit on the tech side, not as much though as I would have expected, a lot more on the industrials and the cyclicals. And in terms of the big spider sectors, you got XLI moving to new highs, you got XLK, more new highs, you got staples, new highs, you got materials, not quite new highs, but getting pretty darn close. So all that was working. Let's take a look at the three things that did not go to the upside. Education and trading services. This continues to get slaughtered here. This is still in a very, very strong downtrend. Very strong MACD positive divergence, just given the fact that how much this has fallen, 73% from highs, but there it is. Gambling also being a little tough this week as well. High volume, closing towards the lows. And then last but not least, industrial metals and minerals. So that's it. That is the full roundup from this week. Lots of things are working out there. Strong period in the market, but of course, like we talked about, still a tough spot to chase. So that is it for me. Thanks as always for tuning in and listening and watching. Let me know what your thoughts are. What are you watching this week going into the second week in November? Please leave a comment below. I always love to read those. And with that, hope you have a great weekend and hope to see you back here next week.